thank you all for coming and participating in this ALP Day. It's a time where we all have to be doing this to try and get as much information as we possibly can and disseminate that information to as many people as we can.
Oh, you know who it is?
I'm gonna mute everybody else just for a second. We got some feedback. So this is the three amigos, the new three amigos, myself and Marilyn Bushnell and Rick Newman. And both Marilyn and I owned INS, and we have been brokering and consulting for, what has it been, almost 15 years? Yeah. And Rick Newman's been in this financing business and title work, you know, since before water, as far as I remember. But for a very long time, he is a specialist in financing, has done a lot of deals with many brokers across the country. So he's very knowledgeable on that. And Marilyn and I work all across the country. We're independent brokers and consultants. And we're here to, like I said, provide some information, some insight. And we will, since we're hosting our own meeting here, we will do what we can with the chat and your questions. So with that, I will go to gallery view and then I will unmute everybody. And Marilyn, I guess you, hold on a second. I will unmute you. There you go.
No one likes to unmute me.
I know. And I'll unmute Richard also.
Yes.
Okay. All right.
All right. Hi, everyone. I hope you're having a good day. Just by gathering together really helps during, I think, this time of great craziness. A couple of things that we would like to talk about, and we want this to be discussion oriented. I'm trying to watch questions as well. Teresa, you're writing, is anyone else missing audio? Can everybody hear us? We can't see your face because you've got your video off. So Teresa cannot hear us.
Our microphones are live. So.
Teresa, okay.
Marty, you can hear us. Just give us a thumbs up.
Marty, are you there? Okay, he can hear us.
All right.
All right. Teresa, I'm not sure what is happening there. Okay, I can hear, but no microphone.
On your PC, if you go down to the bottom left, there should be an icon there for a microphone. And if it has a slash through it, well, that's not going to help. That's just you, so that we can't hear you, but you should be able to hear us.
There's something down there that says audio settings and test speaker and microphone. Okay, I'm going to get started, and I'm going to hope that you can kind of come in the.
Yeah, you go ahead. I'll take a look at these.
Okay, all right. A few of the things we're going to talk about is first really getting your IN ready to sell, and then Eliot later on in the second class or second session, he's really going to talk getting your IN back up during this time, and Rick is going to share a lot about financing and lending, because you won't sell unless we can get that lender to the table. So that's really very important to us. So let me start. And again, this is meant to be a little bit of more interaction and not just pure presentation as well. So we can unmute you, raise your hand, ask a question. We'll try and watch those as well. What are buyers looking for in our market? Well, the buyers aren't going to really change in terms of what they're looking for than what they were looking for 6 months ago or 2 months ago. They're going to want to see your profit history, your numbers, and Rick will get into that. We'll talk about how this virus affects that We know that it's a huge blip on the radar screen, and we don't have a timeline yet on that. But still, having those numbers in 2016, 17, 18, and 19 is really valuable to that buyer today. They know that every inn is in this situation. Really learning your property itself. What does the property look like? Is there great curb appeal? What is and Rick and I were talking about this yesterday, maintenance of the property. You know, what does the maintenance look like? How much might that buyer have to put in? Well, here's an opportunity right now while we are virtually closed, or for the most part closed, to really take a good hard look at some of those maintenance items that need to be done. I think this also goes back to the first presentation that Whitestone did, is that make sure that you are taking care of everything from a maintenance standpoint, but we're not telling you to invest in new items. Don't buy don't add the extra rooms, don't add the new tubs, but really maintain what you have. It was critical before because it always could be a stumbling block for us. It's going to be that much more critical because we want an inn that's ready to sell. What does the zoning and any regulations look like for your property? Will it be saleable and will it have those roadblocks? Again, this is the time, if there are people in the appropriate offices, and usually many of those offices are still considered essential, sending that email, making the phone call to the appropriate zoning, health, fire codes, making sure you have the appropriate regulations taken care of. We'll call those roadblocks to selling. So putting that into order. Take the time to do that now. If you have licenses that are out of date, get those licenses up to date. Have them all collected in the right place so that you have them accessible for yourself. You might do your own inspection. You might bring an engineer in. You might have an inspection done right now to, again, going back to the maintenance, but knowing where you potentially have some issues to deal with. So take a look at that. If you have the time for it now. We're not telling you to spend $20,000, $30,000 to put a new roof on, but know what your issues are. Know where your weak points might be in selling. So again, all of these are pre-COVID issues that would hold up a property and would still hold up a property in today's world. Know a bit of, and you already probably do this, but collect this information, a bit about the community. We get more questions about what are the schools like, what is around, what kind of community environment am I coming to live in? So gathering, again, just a folder of what it looks like. What is it like to live in your area, in your town, in your community? Gathering and putting that in notebook form or in a PDF so you have that accessible. Putting together just like a quick memo, a letter that says, why I like to live in such and such a place would be very helpful, and putting some links maybe to the Chamber of Commerce and the local school system and anything that you have available and accessible. Big one, owner's quarters. Owner's quarters are probably, have changed so dramatically over the years that they become one of the most recognizable items that can get you or not get you to the table. And I'll tell you, and I'm sure Eliot will tell you, many times it's just a matter of decluttering. It's just a matter of cleaning it up. Well, guess what? That's just stuff we can do right now. So recondo your owner's quarters more than you've ever done before. It's probably where we see some of the weaker points as well, because it's, hey, I owned an inn. I know what got dumped in my place. I know I had every little partial roll of toilet paper there. So know what you need to do, and take some time to do that now. This is when you do have the time. It's really just a little bit of labor of love. It might need a coat of paint, but cleaning it up the same way that we're cleaning up our rooms, clean up your owner's quarters so that when we are ready to go through, and we'll start with pictures. It would be very valuable to have owner's quarters pictures at that point in time. So cleaning up and decluttering is probably one of the critical things for that owner's quarters. We do like to see nice, neat, but some of our buyers are looking for more than one bedroom owner's quarters. That's not all of our buyers, but we do still see that from time at this point in time. Find out what your reputation, and you probably already know this, understand what your reputation is in the community as well. And it's a good time to Google yourself, take a look at that. I know you look at TripAdvisor from an in perspective, but from a local community standpoint, you want to understand that as well. So those are kind of some of the critical things. I didn't get into the books, but we can certainly get into the whole financial aspect in detail. And I think both Eliot and Rick can add a few things on that. But your financial record keeping is going to be one of the critical things to have ready. All too many times we see where people say, well, I haven't gotten to my taxes yet, or I haven't had a chance to clean that up. Now's the time. Again, a lot of that just takes time sitting in front of your QuickBooks and really getting those numbers in order, getting your personal expenses out of those numbers at this point in time as well, so that the in, knowing that we have this blip, the in can look as good as it possibly can, even from, let's say, 2019. I don't know if you filed 2019 yet, but having those records, 2019 is probably going to be a very valuable year to really take a look at. So having that as clean as it can be would be very important as well. Eliot or Rick, do you want to add anything?
You're doing a great job.
Yeah. So if anybody that's here has any questions, if you just, for those that have their video on, if you just raise your hand, that's the easiest. For those that don't have their video on, you could turn it on and we could see you, unless you're not dressed or something, and then we don't want that. But one of the things that we always get asked is, how long is it going to take to market it? What's the time frame here? And it's like, when's this COVID-19 going to be under control? We don't know. There are projections, there are models, there are all of those things, but no one can give you a date. And so the fastest that I'd ever done was 30 days between listing it and going under contract. And I still have a couple of properties that are more than 5 years. And so location, price, motivation, all those things come into play here. And so it is a matter of figuring out when it is, having that plan, just like Patty Detweiler was talking about succession plan, knowing where this business could go if there was a disaster beyond this. This is a personal disaster. If you could no longer run your inn, what would happen to it? Where would it go? This asset that you have, you need to know what can be done with that. So in looking and projecting out, we just sort of, when we owned our inn, we said, yeah, it's going to take at least 3 years. So we started to prepare ourselves. We had a place to move to, which is a really good idea. Know where you're going to go, so that somebody comes up and says, yeah, this is the inn for me. You can move. And I mean, we harp on it in all our seminars and everything else. Obviously, your records are key to this. And that's if this is a cash flowing business, that the value is more in the cash flow, in the net operating income, rather than the asset itself. We represent, and people look for, inns that are based solely on the asset, its location, the size, and the real estate value. And it doesn't have anything to do with the cash flow. Why would they purchase such a business? They have their own motivations. Most of the time, it's the location. This is some place that they're very familiar with, they're near family, whatever that looks like. And so one has to really take into account the real estate value. And after this episode with this pandemic, there's going to be an effect on that. We don't know what yet. We don't know how appraisers and lenders, and certainly Rick will speak to that, but how they'll look at it. How are they going to look at appreciation or depreciation when all business has been shut down by the government? The market hasn't changed. The business hasn't changed. So how can they really use that and average things out when it wasn't the fault of the market or the business? So it's going to be an interesting thing to play out. But
I would say another thing you can do now, if you're thinking of selling in the next year or so, start taking inventory of your FF&E, furnitures, fixtures, equipment. It's something we ask for. It's something that's absolutely needed at the time of settlement. It helps determine your value. So room by room, and just name it according to each room, take a list of what will be included in that sale and what will be excluded. So one dresser, one queen bed with mattress and headboard, and so on and so forth. Go through. If there are some items that are really important to you from an exclusion standpoint, when it's time to sell, you may consider replacing them, removing them and replacing them. So you don't have a big long list of exclusions when you're ready to market your property for sale. It's very, very helpful for people to see, because darned if it's the one thing that's in that room that you love and you're going to keep is also the thing that the buyer's going to love. So put your inclusion exclusion list together. You can do that now. It's very helpful for us as a tool as well.
yeah.
Rick, any thoughts?
I don't see any questions. Rick,
I'm sorry.
go ahead.
I was just going to say that an observation that I've made over all these years doing this exclusively is that it's frustrating from a lending perspective when a seller doesn't appreciate that they need to make their last 3 years their best 3 years. And what I've observed is, of course, just the demographics of who buys an inn and when they buy it in their lifetime. It's often after, they're retiring from successful career or careers, and they decide they want to do this together, and they might be in their early to mid 50s or even 60s. And so after 5 to 7 years of running it, they're approaching 70. They have grandchildren and great-grandchildren perhaps, and they want to spend more time with them naturally, and they travel more and they have a good life. And instead of making those last 3 years a son of a gun, the numbers slide, and we in financing use the last 3 years tax returns, an average of the three, to compile an appreciation for how the property will debt service a loan, whatever that may be. And it amazes me that we as an industry don't get this fundamental point out better than we do, because it significantly affects the value of the property when it comes time to appraise it. And it impedes a lender's ability to get the highest loan to value. So if a buyer comes in and has 20% to put down instead of 30 or more, that loan still has to cash flow that 80% loan. And it gets complicated, but my only point is that if you haven't filed your taxes, as Marilyn said, for 2019, pay special attention to make it look as good as you can, make it real, but take out a lot of your personal expenses that are really unnecessary to have there.
I think we've used up the first 20-minute session. Any questions that you might have, you can ask us now, or feel free to email any of us later today or anytime. We would be happy to help, and our information is on the ALP site. I think we're supposed to take a 5-minute break.
I think we're supposed to take a break.
Okay. And
How do-
feel free to come back if you want to ask questions. We'd be happy to answer them.
Do we just stay on?
I think so.
I don't know.
Yeah.
Would-
I'll ask Heather.
Yeah, you go ahead. So I'll jump right in here as to getting, what it would take, the preparation for getting your inn open, if it isn't already so. If you're looking at the end of this month, the beginning of June, or even further out. My first comment is, you got to take this virus seriously, please. I have somebody on the front lines, a good friend who is working emergency services in New York City at a couple of hospitals. And I can't tell you enough that this is, if you get this, it is not a good thing. You can obviously die from it. But why I'm really harping on this is because, there's going to be a risk until there's a vaccine, plain and simple. It's going to float around. And so when you decide to open, whether it's, one room, yes, Marilyn.
There is a question, but go ahead. I'll let you finish.
And I'll finish this point. When you decide to open, there are a lot of precautions, and I'll certainly go through a few of those. But you have to figure out the path that your guest has taken to get there. How did they get there? And who did they come in contact with to get there? And are you protecting not only yourself, but your staff by allowing them to come into your property? You have to please consider all these things. I'm not saying don't open up. That's your business based on the state and what the governor's orders are and all of that in the CDC. But I want you to take it seriously. I don't want to lose anybody here. That's the main thing.
Why don't we unmute everybody so they can actually ask a question and they don't have to type it in at the same time. But the one question I do have here is for you, Rick. It says, will the 6-month SBA forgiveness still apply to new loans?
So this is the end of October.
There's too much feedback. I'm going to have to mute everybody and then
Yeah.
unmute Rick.
Cruise ship went.
All right, let me unmute you and unmute you. Okay.
Rick, will the 6-month SBA forgiveness still apply to new loans? And is it forgivable on a property that has already used the benefit?
So the provision of the act that you're referring to applies for either a purchase, so for a new buyer, or a refinance. So I was going to talk about that a little bit because some folks here, after what we're going through, may need to reorganize their debt after this is all said and done. But the loan, as you all may know, for either a purchase for a buyer, for example, or a refinance, it has to close. It has to close before September 27th of this year. And then there's a 6-month abatement of the principal and interest. So that applies, as I say, for a refinance or for a purchase. Does that answer the question? And will it be impacted by other loans? I don't believe so.
Okay.
I haven't been asked that question, but I would assume that you'd be extinguishing those loans if you were to reorganize your debt through a refinance. Now the SBA 7A is the only one that abates the entire payment. So you could go for a conventional loan, for example, and not have the benefit of that program under the CARES Act.
Yeah, and you're gonna put up a sheet that better explains that shortly.
You're going to put it up, right?
Oh, sure. I can do that. So I just wanted, this new frontier that you're all facing, and in listening to Allison and Scott's message this morning, there's this balance. Obviously, you don't want to start doing capital improvements at a time when you're not getting any revenue. And then in the same breath, you're talking about a facility redesign. How do I make my facility more, more open to having people come, having them have confidence that they want to come. AHLA, if you're a member of ALP, you're a member of AHLA, and you've heard from the speaker just before us that they came out with new guidelines. And there's going to be a webinar, another Zoom for all of you, in case you haven't had enough, tomorrow, and they're going to go over that in detail. So you need to go to the American Hotel and Lodging Association, get their daily briefs, and go to that Zoom call so you can see what those protocols are. And that will really help you on the sanitation part. Food and beverage is going to look a lot different. We've talked about that. Yes, Marilyn.
No, you finish and when I do that, I have questions coming up.
Okie dokie. Food and beverage, they mentioned also about, getting rid of the buffet and having coffee in rooms. And there are all these things. Some of them come at a cost. Some of them don't. You can certainly rearrange furniture. When they come in, there should be less things to touch and less things in front of them. However you're going to feed people.
And one thing I've heard on webinars is we will probably stop doing touch-ups in rooms. Once a guest checks in, it will probably be, that's it for the duration, if they so choose, because they may feel that's the safest way to manage that room. Do you really want someone coming into your room after I've checked in? So consider that as an option to look at as well.
Well, yeah, I was talking about, yes. With the food and bev, you're talking about delivery of breakfast. You're talking about grab and go. You're talking about things. It's gone from high touch to no touch. It's a completely new dynamic, and you need to be flexible. You need to be, you got to live in the present and plan for the future. Everything behind us, pre-COVID seems like 100 years ago, but it's both analytics and how you treat guests and how you get them to come to the inn, all new analytics. They're not going to be looking at rate. I take a little bit of a difference with Scott and Allison in that no matter what you do with your rate, you're not going to be able to convince them to come. They need to be comfortable. They need to have confidence that you're doing what you're supposed to do. And there are some people who, and certainly Allison and Scott showed us some, who right on their website instill confidence. They tell you that they are taking measures that will make you feel safe, whatever that is. Maybe it's 48 hours between each guest. Maybe it's separate entrances. Maybe it's keyless. It's all electronic. All that stuff's going to be coming in. A lot of it has a cost. And so here, we're saying don't make capital improvements, but there's going to be a new dynamic to your guests. There are things you can do that don't come at a cost. And it's especially with marketing. And you're marketing now, so let's really jump on it. And one of the things that they did mention was with pay-per-click, if you use it, or any other channels, you can hone it down to local. We've heard from Smith Travel Research, all the big travel sites, all the commercial brokers, everybody saying that domestic local travel will be the first to recover. And that's where I'm going. I mean, I'm not getting on a flight to Italy, but I really want to get up to the Adirondacks. I live in Pennsylvania, so it's a 6-7 hour drive. Am I ready to do that tomorrow? Sorry, not yet. So I have to be comfortable as a consumer. So you have to instill that confidence in me at your property. However you do that, especially with marketing. But when I get there, I don't want to touch anything down in the lobby or at the desk. Obviously, I'm not putting my hand in the cookie jar. And like Marilyn said, housekeeping for a 2-3 day stay, there's not going to be housekeeping. If you have a lot of trash, put it outside the door. There's a lot of things that you can do. But I preface this whole, my little spiel here is that you also have to think about where they've been and are you going to, take their oxygen blood level and their temperature and everything else, and what are the legal ramifications of that to protect yourself and to protect your staff. It's
All
really
right,
important.
let me get into some of these financing questions that are popping up.
Oh, it's
Are you ready,
typical.
Rick?
Rick gets all the questions.
Rick, when will, let's see, no, so if we are currently 7A and have had an abatement, someone could buy the property with a new 7A, could still take advantage of a new abatement.
Correct.
Want to be sure.
Yes, you can't refinance a 7A with a 7A, but a new buyer coming in can get a brand new 7A.
Okay. And when will the SBA start taking and approving new loans?
So I just, we're going to show you an example of one I submitted last Thursday, I think.
Do we want to put that up,
I'll do
Elliot?
it now. Yeah.
We'll do
Okay,
it now?
we'll put that up.
Okay.
You keep talking because I'm going to have to find it.
So the answer is that most banks throughout the country, small, mid-sized, or large banks are tough to work with anyhow in the hospitality sector because they view it as a high risk property type. So if you say regional and mid-sized banks have been inundated and truly swamped with all of these requests to for abatements of payments. And there's a lot of work to approve each one of them, and they've had thousands and thousands of them. And as I said, hospitality is a higher risk property type in their eyes, and they've had a lot of abatement requests there. So their view of hospitality going forward is going to get a little more selective. And it's one of the reasons why the SBA program, which Eliot kindly just put up in front of us here, is going to be very advantageous. Actually, for the first time since I've done this, a 7A loan program is going to be more attractive than a conventional or a 504. So there are basically three types of financings that we do when financing ends. A conventional loan that would be available through, as I said, smaller banks, mid-sized banks, credit unions, et cetera. And this just shows a typical today's rate for a conventional loan at 4.25, 5 years fixed, 25 or 20-year amortization. The monthly payment would be $11,488 on a seat of property up here. The property transaction price is almost $2.5 million, down payment at 15%, mortgage of $2,129,750. So the conventional payment would be this. A 504, which is a combination of a conventional loan in first position at either 45 or 50%, and then a SBA originated by a CDC or a Certified Development Corporation for 35%, totaling 85%. The payment there would be $11,935, but as the note says, only the SBA portion would be abated for that 6 months following closing. So they would receive an abatement of $31,062. And here we have a 7A at, I can originate them at 1.5 over prime if it's a good performing in and a good buyer. So it would be at 4.75, 5 years fixed, 25-year amortization. And you can see the payment is very close to the to even the conventional, and the abatement is $72,540 for the first 6 months following closing. So what this I don't know if I'm getting sidetracking myself, but what this does is it's a silver lining to this terrible cloud that we're living in right now, because following the inns opening and resuming to some level of cash flow, a buyer could close, have 6 months to get the inn up and running at peak performance, and not and have that the benefit of that abatement. Did I drift away from the original question?
No, that was good.
Okay.
That was good. I mean, this is pretty amazing.
Well, I think it's exciting because for the right set of circumstances, a good performing inn and a buyer doesn't have to have direct industry experience when there's a 7A guarantee, but it certainly helps. And it also helps to have skill sets that are transferable to running an inn.
Yeah, this is a best case scenario, really. I mean, you got a good, strong buyer and a good cash flowing in. So it's dependent on that. One of the things I wanted to ask you, I mean, I had a client after the recession who purchased an inn and knew that their time frame was going to be only 5 years. So they picked a one-year arm and got an amazing interest rate. Could you negotiate the 7A to a 1 year?
No, most 7As are originated all over the country. They're a desirable loan for banks to originate because most banks, they don't portfolio 7As, they sell them in the secondary market, and they get some pretty good yield spread on them. So they're lucrative for them, and they generally originate them at 2.25 to 2 3/4 over prime. So I have this, not to brag, but I have this unique relationship nationally to be able to originate them at 1.5 over prime. Right. So it puts it very close to conventional.
But you couldn't get a 1 year arm.
Oh, sorry. Yeah, there wouldn't be any benefit because the 5 year, even in residential, the difference now in arms to because of the way the market is, there's not that much difference between a 15, a 30, and a a 3-year.
Right.
All right, the question here is, but when do you see the SBA starting to take new loans again? September will be here before you know it.
Yeah, and it takes, as Eliot noted early, I mean, we've done deals in 30 days, start to finish, but that's an anomaly.
Yeah.
45 is doable. 60 days is comfortable.
And Rick, are they taking new loans right now?
Well, yeah, I get them in underwriting right now because it takes time to put together all the documentation we need to do a business plan, for example, that we need with SBA loans, and to really get our ducks in a row. And we can get into kind of a pre-underwriting to get feedback to put the finishing touches on a file. And it's in the queue ready to go to the loan committee, when they're basically receptive to hospitality again, which this one, as I said, I submitted last Thursday. It's in front of the underwriters right now. And I'm sure that if a commitment were to be issued in 2 weeks' time, there are going to be provisions essentially saying that the inn's going to have to be up and running. It's going to have to be restored, have some semblance of an income stream and future bookings, et cetera.
So I think what we're saying is that, and Eliot and I certainly know, there are buyers out there still looking. Are they hesitant? Yes. Are we putting some documents in place that may deal with that hesitancy? Yes. There are buyers out there for the right property. There are some tools, as Rick is saying, that are potentially out there. Will everything move tomorrow? Probably not, but we need to be ready for that. We need to be ready for the buyers and for the lenders from that perspective, so that we're not delaying everything. So if you do have an interest, get some of the things done that we talked about early in this session, and be prepared. Get out there, when you're marketing yourself to keep the inn open when it can open. We also want you to market yourself if you want to be on the market for sale fairly soon as well.
May I say something?
Please.
Oh, I suppose.
So I think it's worth noting that I'm assuming that we have predominantly current owners, innkeepers on this this call more
Correct.
so than aspiring innkeepers.
Right.
So I think it's important to understand when financing commercial property, it's not just about the property, obviously. There are two sides to it. There's the buyer, what the buyer brings to the table in terms of assets, liabilities, credentials, etc. And what we do, you could take that down now, Eliot. I think we're
Yeah, I think that's something, you can put us back up.
Put something else up.
Or
okay.
at least put Rick up.
No, that's okay. I look better small at this age. So knowing, having a good valuation done on your property and knowing what it's really, truly worth. Of course, an appraiser will be the ultimate arbiter of, it's going to be selected by the bank. They're going to really, validate the valuation that's been done for you by Eliot or Marilyn or somebody. And but to know what your sweet spot is and to know the kind of buyer that you're looking for
Right.
is very, very important. And we discuss potential listings and listings. I do with Marilyn and Eliot all the time to make sure that we're looking for the right buyer and that we're turning over the right rocks. Because if an inn were underperforming, for example, as I noted earlier, the last 3 years haven't been the best for whatever reason. People get sick, people get divorced. You've got to have a very strong buyer to come in and maximize what you're going to get out of that property. Because if they have credentials in terms of direct industry experience, which very few have, or really strong management and marketing kinds of experience, and if they have assets that are going to survive post-closing, so they're going to have post-closing liquidity. That makes up for a lot of deficiencies potentially in a property that wasn't doing quite so well from 2017 to the end of 2019.
Yeah, and certainly, I'm always amazed that when we are really concentrating on cash flow and looking at earnings before taxes and interest, that we lose sight that maybe in this particular case, a buyer is not even interested in that. I mean, this has happened. So those properties that are out there that haven't been cash flowing the best, perhaps the real estate and their asset will be of, better, bigger interest for that buyer than the cash flow. This does happen. Investors obviously are looking for return, but that return might not be in the current numbers. It might be in the numbers that they see they can do. And just to reiterate what Marilyn said, and Rick, he's in a deal. We certainly are under contract with deals. We have lost a couple of contracts because the buyers cannot purchase a property that is not cash flowing. And Rick, you mentioned that underwriting will be looking for at least 60 days of income, correct?
Well, this has never happened before,
Right.
So we really don't know. I'm speculating that they're going to want 16, but it's potentially 30 days of income with a lot of bookings,
Right.
where we can show the reservations through the reservation system would be enough to satisfy them. Again, if the buyer has, and I should have mentioned this earlier, outside income, which is very, very important, especially for lifestyle inns. But it's even important for an inn that's doing well coming out of COVID. If one of the principals are going to be keeping their day job, you'd be surprised at some of the day jobs that people retain after they buy an inn. It's amazing how much money some people make, but that helps. It's belt and suspenders, in underwriting. So underwriting is evaluating risk, just like just like an insurance company does when they evaluate any risk. And pricing in what we do, pricing and terms is impacted by the risk assessments of the underwriters.
Right.
And you know, and buyers and you and I and Marilyn all have to, you know, help a buyer assess that risk, and provide them with the data that they can then say, this is a deal that, you know, this is the deal I want to go through with. Or not.
We always try to do that. Of course, you'll agree, Eliot and Marilyn, but we try to do that before you get a buyer excited about a property. It doesn't make any sense to show a buyer a property they can't possibly buy.
Right, exactly.
One of the things we have seen in the past, and I think it might even be more encouraging in the future, is the number of people who do work from home and had that second income for the inn, and they were working prior to this from home, and there may be others as we proceed down this route that will continue to work from home, or now it's the new normal, and will be able to get up and move and buy that inn, and you know, one person is running the inn and one person retains their job from that property. So there could be even more of that we see in the future, Rick.
Yeah.
Yeah.
Listen, I sent that prior analysis to you and Eliot immediately when
Right.
I prepared it for this particular buyer, and I was excited the way it turned out. I sent it out. I was filled with enthusiasm because I wanted you to know that if there were any buyers that you were working with that were kind of waffling because of what's going on, it's understandable, but they could get excited about ramping up their decision to buy based on being able to get a 6-month moratorium on P&I.
Right.
So
Right.
Any other questions?
I want to go through this, and then I'll take this off the screen.
Okay.
But to Rick's point about getting advanced bookings, when you're looking at your revenue management and when you're looking at past performance and all of that, you had staff, you were up and operating, you had operational costs and all of this. So when you looked at your revenue per available room, RevPAR, which is what the analytic we use the most, that doesn't work now because you haven't had people. So appraisers, I believe, my thought is also that this is a conjecture, but appraisers and lenders will look at that advanced booking. They're going to look at occupancy, rather than ADR. So it's because ADR is not happening yet, right? But you start getting bookings and that's occupancy. That's an analytic that they will all look at. Real quick, obviously we're in this, the emergence phase will come in a couple of months or whenever, I'm not going to predict. Third and fourth quarter, we should know a lot more. But domestic travel and local properties are set to recover the quickest. And there was an INCRA chat for Allison and Scott's discussion. She said, well, I'm dependent on foreign travel. That's going to be one of the last ones to pick up. I mean, it's, the airlines are waffled, countries are spinning. So that's you're going to need to just revamp your marketing and everything else to see what else is out there for you, because that's going to be slow to come back. It will come back, but it's going to be slow. And that's why the second bullet point, it's not going to be competing on price, because to get that demand back, you have to build consumer trust and confidence. That's your main goal right now. So focus on the things you control, your marketing, your safe protocols, your safe spaces, and building your local connections.
And there is a comment here. It says, but future reservations aren't really happening yet.
Correct. We don't know when that's going to happen. Yeah, I mean,
I think that's going to evolve over time. As I've heard it say, it's going to be like a little water faucet. It's going to turn on as a trickle, and eventually we'll get back to a fuller speed. But just get yourself prepared for when that does happen. Get yourself prepared.
Well, one of the things that we collect when we're when we're putting together the data for a business plan would be the occupancy data, for example, for 2019. And coming out of this, we may get it for 2018 from the reservation system from the inn. And how we would use that even more now would be to show if we had 2 months of activity prior to application, then you could look back to the historical record and make a case, that this thing will be, back in the good in some period of time. Just a confidence builder.
Yeah.
So, yeah.
Yeah.
Eliot, are you going to talk about how this is going to impact yours and Marilyn's approach to valuing an inn, to establishing, a listing price and all that, or are you not? Is this not the place to do that?
I mean, I'm doing a whole seminar on that in 15 minutes or 10
Oh, you
minutes
are?
or whatever. But it's, we have to go with, just like you, I'm getting in touch with appraisers. I'm getting in touch with CDCs and those kind of things to see what the lending is going to be like, because that's going to reflect on how we look at things. I don't think properties are going to lose appreciation over a 3 or 4 month period that they're closed. The real estate value is still there. I live next to a residential realtor, residential broker here in my little town of Kennett Square, PA, and he's doing 5 closings a week. I mean, he's just flying, and that market hasn't stopped.
Yeah, residential market's still happening.
And multifamily, office, retail, it's down the tubes. Industrial hasn't blinked. All industrial, that as an asset class has been great. So, being in touch with all the commercial brokers and looking at how the real estate asset part of it's going to come into play, I'm always trying to see how that's going to work. Cash flow is cash flow. I also use historicals, because even before COVID, if a property was declining in income and net operating, and it had a good reason, lenders that know the property and know historical numbers say, yes, this happened and therefore the revenues tanked. We get that. And a new owner can resolve those things. And so we're going to give it a bigger value than what it's showing right now. I mean, that's happened. So it's going to be evolving, Rick. There's going to be quite a juggling act here in the next few months, because I certainly want to get some buyers to think about and move forward because of the SBA. Absolutely.
Yeah. So from an underwriting perspective, so there's an investment perspective, and I talk about this with these guys all the time. There's an evaluation that a buyer would make, as to whether a property is a good investment in terms of resale, appreciation, and all that. And in underwriting, cash flow is, of course, you want the floor. The floor is always the value of the real estate. But lenders don't really want to own that real estate. They don't want to foreclose and own that property. They don't want to be in your shoes. That's where the old 25% came from. 25% down was enough that if they sold the property, there's enough of a spread there that they could manage the property for a while, dispose of it, pay a commission, and be out whole. That's an old number. I don't know if it's true anymore, but we underwrite from tax returns. All banks do. P&Ls are only good for the preparation of the business plan and to compare 2018 to 2019 is the end pretty steady. But what's on that tax return is what we underwrite from. And if we can't get it to cash flow from that tax return, then you're looking at more of a pro forma based loan, and you're looking at what the buyer has the ability based on their career and wherewithal to do with that property, to take it from point A to point B. And what I guess I'm saying is, you can imagine coming out of this, that that's going to be a harder loan to do for any buyer than something that was cash flowing well in 17, 18, and 19, went through this COVID, but returning to its glory, and you've got a strong buyer, that deal's easier to put together.
You bet.
Now, there was a comment here that says our numbers will not be there this year because we're limiting the number of rooms available and having the rooms vacant for a time between bookings.
Underwriters are throwing out 2020, as Eliot, I think, alluded to earlier. It's an anomaly, and it's nobody's fault. So the last 3 years, 19, 18, 17, are the ones that are going to be averaged to evaluate the performance of the inn.
Chris? Hi, Chris. I unmuted you. Are we good with time?
Yeah, we have until 3:30.
Oh, what time? I have no idea what time it is.
It's 2:59. We have till 3:30, but we didn't take any breaks.
Oh.
And I did just get a comment saying, did you start already? I don't know if we want to go back and recap a few things.
Were we supposed to take a break?
We're supposed to take 2 breaks.
Yeah, 3 20-minute sessions with a little break in between. I would have to say, I don't think it's really being adhered to.
Right, and we're not.
Yeah.
So we're just kind of staying in here with everybody.
Yeah,
And I like the questions.
sessions,
Feel
so.
free to keep asking those questions.
Yeah, yeah. Carry on.
Thank
Hello,
you.
Chris.
Sorry, I muted her. There you go.
Okay. Hi, Chris.
Yes. Hello, Rick.
How are you?
Good.
Any other lending questions or preparing your in? We recognize, hey, this is a tough year, and it's gonna remain tough for you this year. It's really doing what you can do for minimal cost, really cleaning up, getting your house in order, cleaning up those, Marie-Kondoing your owner's quarters, getting your books in order, making sure 2019 looks as pristine as it can. Really hard for me not to talk without my hands. I have to see them. And just really knowing where your property stands, so that if you are ready to put it on the market, either sometime this year or next year or the year after, we'll be there for you and be ready. Everybody has this blip on the radar screen. Everybody. And we're hearing from Rick that, the lender's going to understand it. It's how we recover from it, how we each recover from it.
The the whole thing about the American Hotel and Lodging Association, and along with all the big hoteliers, obviously their procedures and protocols for the health of their staff and their guests is paramount. But when they're looking at their rooms, they're taking a lot of stuff out. They are, hangers, and I mean, do you need all this stuff? No, it's just the less things that you have, the better. So if you go into a room and there's any superfluous things, they should go. They got to go into storage, because the cleaner it looks, the more confident your guests will be that there's not virus lurking. And when you're moving furniture or thinking about doing that kind of thing, it also means that it's going to be easier to clean when it's time to do so. So that's important. And the whole 24-hour, 48-hour break between guests, that's being implemented, and all the food and beverage changes. And that's of course, weather dependent. If you're down in the southern climes, getting people outside, they'll feel a lot better. And so these things are really important, but it's also, how do you protect yourself and how do you protect your staff when you're bringing people in? Don't jump into this unless you're sure that everybody's safe.
let's see, a question. Scott had mentioned low interest or negative interest. Will these accelerate the plans of aspiring innkeepers?
That's yet to be seen. It should. I mean, I'm getting, I'm dealing with a couple of new cash buyers. Are they watching that? I'm sure they are. But does it mean they'll pull all their cash out because they'll get charged interest? I don't know. I mean, that's a very few people that I know of. But will it have an effect? Yeah.
I think more so we'll have buyers. I mean, we were working with buyers prior to this. I think they're waiting in the wings. I think some of them, there's certainly a number of them that still want to move forward. They're kind of waiting to see what else might come out on the market. So I would say they have pent up demand the same way that travelers have pent up demand. And those that still want to move forward in this entrepreneurial world, I think will, and we will find, they're going to find an in. Now, just because there are a few people coming in and out at different times, we did not have a lot of specific canned presentation. A lot of it was discussion, but we do have some documents that we would be happy to send you. If you'd like, you can either email Eliot, myself, or Rick. We'd be happy to send you those documents. I've got a presentation on preparing your property to sell. Be happy to send you a PDF version of that. Rick has a document as well. So feel free to email us. Eliot is Eliot@EliotDalton.com. So his name. I am Marilyn at MarilynBushnell.com. And Rick, you are Rick at InFinancing.com?
Yes.
That's it.
So we would be happy to email you what we do have as well in this particular presentation.
So since, there are I see some new people here that came on for the last presentation, financing. Let me put that,
Put that back up.
It's hard to see, most people aren't using their video, so I can't see them if they raise a hand or give me thumbs up or any of that stuff.
They'll write comments, I'll let you know.
Okay. So I can put up Rick's.
Are there that many new people, Eliot?
Kind of coming in and out because we didn't take a break.
Oh,
right.
It's because we're all talkers.
I guess so. Let me move, hold on a second. I got to move this bar over there and then I got to get.
Yeah, they just finished I think we're in our last 20 minutes at this point.
So, I mean, we could go over this again, but negative, how do you feel, Rick? I mean, the negative interest when and if it happens, obviously it's a dire move by the government if it does. I certainly haven't seen it in my lifetime.
Yeah, but that, there's a difference between, you've all heard of Wall Street Journal Prime, and there are other indexes that lenders use to establish the rate that they're going to lend at. A lot of what I do is tied to prime. So there's a difference between the discount rate or the rate that the Fed lends to banks versus what the banks lend at. And the prime rate is the best way to gauge that. And so the prime is 3.25 last time I checked. And something between 1 and 2 3/4 based on risk would be the rate that a commercial property would be underwritten based on. So do you want me to go through this again, do you think?
Yeah, and Rick, I have a question that was posted. They're specifically around the tracking of expenses covered by the PPP. When do we start tracking things like payroll expense or utilities expense that are pardoned under the PPP?
I had nothing to do with the PPP. The only role I had in the CARES Act was to make sure that all of my clients got abatements on the mortgages that I helped them with. And the PPP was administered basically by banks, as you've been seeing all the coverage. Large banks, small banks, mid-size, regionals. So I didn't have anything to do with it. But your
Accountant.
your accountant. I mean, I'm sure most of you are using QuickBooks, and your journal entries are going to be able to be manipulated by your accountant to the extent you need them to be, to provide an accurate representation of your finances.
All right, and the next question, Rick. Would it be a good thing for a small inn, it says 10 bedrooms, to take an EIDL at 4.75% when things are already so tight?
Well, can you get it? If you can get it, you have to make a decision whether you're going to load the business down with debt that you can't hope to service. So you have to make that decision yourself. As I think I noted earlier, I'm expecting, even after today, that I'll probably get a lot of calls on restructuring debt using the 7A to refinance, and wrap up a lot of things that people are going to have to do between now and sometime 90 days from now to get reorganized. So, and use this particular program that Eliot posted up, the 7A that we talked about earlier.
So I mean, in looking at the other two topics that we had been talking about, and getting your in prepared to sell and getting your in prepared to open, two different things. But the things that Marilyn mentioned are common housekeeping financially and for your facility, and what to do now so that you can stay engaged and look to the future when you are going to be open, is really what you need to, I think, what you need to focus on now is trying to get yourself in front of your clients, in front of your repeat guests, in front of new people that are looking. Another thing that I think you need to do is look further than look local, so that you can do new partnerships, do some new marketing, because people, when they arrive, they're not going out. They need to have everything centralized for them. So you got to know who's delivering the meals, lunch and dinner, who's providing services that they might be looking for. So, rekindle all those local relationships that you may have left undone for a while. And again, it's just a matter of how do you make people feel comfortable and confident in returning to your property. That's the main thing. So even though, Scott and Allison, yes, they run a marketing company, but I don't. And I know that I've got clients that have put their trust in me that I am marketing their property. So obviously we haven't stopped marketing. And have the inquiries almost dried up? Yes. Are they still coming in? Yes, they are. We do have new buyers inquiring, obviously not as many, but they're going to be, and I think Rick and I talked about this, and Marilyn talked about this. Will there be people, will the sharks be circling? I mean, it's opportunity. It could be opportunity. Are we going to see people that get into financial trouble? Yes, we are. I mean, that is going to happen. But those that I dealt with in, post-recession were good people. And it wasn't like they were trying to get the best deal they possibly could by, squeezing the seller. These were circumstances that arose, and the ones that are presenting right now are unprecedented. So stuff's going to happen. But there are going to be people out there that want to get into the business now who see it as opportunity. Lodging's been around a long time.
I work only or predominantly with buyers. So I'm always heartened when buyers take the attitude that, gee, what do you think's a fair offer based on the revenues of this inn? I tell them, obviously I'm not an appraiser. And I said, why do you ask? And they said, well, they often say, oh, I don't want to insult the seller with a lowball offer because I realize that this is a warm and fuzzy business. We're going to need the relationship post-closing with the seller. We'd like to have that. And we'd like to be cautious about and thoughtful about presenting a fair offer when we do. And I don't know if there are a lot of industries that bring those kind of people into them, honestly, but I always thought that was great. And it happens almost without exception.
Very true.
Yeah.
Very true.
Any other questions? Oh. Okay. Again, we'll post this information. We can post this information up or you can email us for any of the data that we have been presenting as well. We still have probably about 10, 15 minutes. I forget. Chris, what time is this supposed to, I forget what time it's supposed to end, since we just keep going. Is Chris still here? I don't see her.
I don't see Chris, no. Nope.
Okay.
But I mean, if there are no further questions.
Then what do we do? Just end it?
I'm assuming so.
Chris did say that ALP has a page on the website called Buying and Selling an Inn, and we can post
We'll
the
post
docs
it
there.
there. We'll post the both my doc and Rick's doc there. Mine was preparing your inn for sale, and then Rick's doc on the financing.
Right.
Okay.
I guess I could say one last thing.
I'm sure you have something.
Somebody did say, "Can you start from the beginning?"
Sure. Call me on my cell phone.
We could start from the beginning if you want.
So one of the things that impacts the buying and selling inns and financing inns is whether they're lifestyle or viable inns. or
Good
feasible,
point.
right?
And and if you would like to define that, not everyone might know how we perceive a lifestyle inn versus a viable inn.
Yeah. So I guess broadly, I would say a lifestyle inn is one that the debt service can't be serviced from the revenues that the property generates itself. It needs outside income. So retirement income, outside jobs by one or more of the principals, that sort of thing, in my mind, and I think in the minds of underwriters, defines a lifestyle inn. And I guess you could also say, back to Eliot's example, you could have a property on the beach in Malibu where the real estate value is so out there that you could never get,
Right.
Be hard to get a property to cash flow there, right? So that could be a lifestyle inn. They're making an investment for investment purposes, that that they have the long-term property appreciation that they're looking at.
And it's paying some expenses of the inn, but certainly not all.
Yeah, so we finance lifestyle inns differently, as you might be able to imagine. If they are able to be financed, it's either close the business, finance it as a residential property, and not consider the income from the inn. What happens then is,
Again, let's clarify that lifestyle inns are very difficult to finance commercially.
with a commercial loan, because they're not going to debt service the loan that's needed. Okay, so
Correct.
likely not be able to do that.
Correct.
So when you take and I don't know if you could say a 5 or 6 bedroom and under find it difficult to cash flow, you could have it in a sexy place with a very high ADR, and it can cash flow the loan. So you can't just go by the number of rooms. But you finance lifestyle loans that are commercial using what's called a global debt to income ratio. So you take the income from outside the inn, from all sources, and you apply that against the expenses from the inn and their personal expenses. And you can often get a deal to work that way. And so I just want to say, if you are a lifestyle inn, and this also goes if it's been an underperforming property, as I said earlier, outside income makes up for a lot of sins with the right buyer. Things are possible. It's aligning the right buyer with the right property to begin with, which is where all the magic potentially happens if our homework is done early enough.
Right.
There is owner financing, right? Sometimes when my folks sold their inn in New Hope, Pennsylvania, a long time ago, 30 years ago, they held the entire mortgage because they didn't have to declare the gain, right? They got mortgage payments. They got 10% interest way back then, and they lived on the mortgage payments. You know, they owned it outright, and it worked well for them. And sellers can hold some financing. I guess we should talk about that, right? That often makes a deal.
It happens in bits and pieces, and it often happens where there are gaps between that SBA loan or that loan and what the buyers might bring to the table. So we do see some form of seller financing from time to time. There are some sellers who either cannot or will not go down that road, but it can certainly limit the buyer's ability to purchase that property.
Or make a buyer's ability to purchase the property.
Right.
So, yeah. So if it's a small enough, if it's 10%, that either helps the buyer get into the property or helps because, you know, let's just say it's been underperforming and it won't cash flow an 80% loan, but it will cash flow a 70% loan. That's where you would use that seller financing.
And
Very,
Rick,
very
how do the lenders look at that?
well. Thank you for asking. It's a conventional loan, so a regular bank loan. In underwriting, the bank that debt service calculation will include the debt service that's being paid to the seller for the seller held second.
Okay.
So it has to be able to carry both.
And that's actually another clarification you might want to make. When a seller does, and you are probably all here potentially sellers, if you do carry a loan, that loan is secondary to the primary lender of that
Right.
property.
And lenders will 90% of the time require the seller holding that second to be what they call in a standby position, meaning they defer principal and interest payments for 2 years, but the interest accrues. So they don't lose the interest. They just lose, you know, the monthly payments for the 2 years if it's necessary. Sometimes it isn't. So in a conventional loan, that second is factored into the debt service calculation. In an SBA 504, there are obviously already 2 loans. There's a first and a second with the SBA. So a seller is probably not going to want to be in third position. So it's not used in 504s. It's very handy in a 7A, back to the beauties of 7As, because that seller held second being placed kind of on hold for 2 years is not considered into the debt service calculation. So it's easier for the buyer to qualify. Is that clear?
We have to wrap this up. So I just want to say thank you.
Again, everyone, if you have any questions, comments, feel free to email either Eliot, myself, or Rick, or all 3 of us. And we will put our documents up on the ALP site. And we look forward to hearing from you in the future. Thank you all.
Stay safe.
Peace.